I want to hear founders say, hey, we're going to get 100,000 visits to our offering page, hoping to see a 2% conversion rate from not hitting 2%. This is what we're going to do to optimize. If the average investment is $1,500, that's how we're going to hit $3 million. This is what the creative looks like. Here are the channels. That to me says that group is set up for success. Anything short of that, conversations just speaking to the cost of capital without any real understanding of what are the traffic drivers, what are the lines of copy, the messaging that are going to convert audiences. It definitely shows me something that's overlooked and likely going to appear in the performance metrics.
By the end of this episode, you'll know how top campaigns actually attract investors online, the 3 levers that lift conversions, and what Jason's team learned across 500 plus investment crowdfunding rounds so you can scale beyond your niche. Welcome back to the Enhanced AI Partners podcast, where we explore how leaders scale with people, process, and pragmatic AI. I'm your host, Johan Mejia. At Enhance, we help fintech and SaaS leaders grow faster with AI-powered outbound content and workflow automation. Today's theme is From Niche to Scale, how digital campaigns drive capital raising. My guest is Jason Fishman, CEO and co-founder of Digital Niche Agency, the growth team behind 500 plus investment crowdfunding campaigns across Reg C, Reg A+, and Reg D, including multiple 8-figure races. Jason, congrats on the new baby, and welcome to the show.
Thanks, Johan. I appreciate that, and excited to be here.
So let's get ahead and get started with the first segment on why investor acquisition is a marketing problem and not just a finance issue. So you started as a growth marketer and leaned into capital raising. What's the thing that clicked?
We began as a growth marketing firm, like you mentioned, and our clients were always bringing up their fundraising. They would ask us to even work on the marketing section of their business plan, speaking to how they're going to hit their next levels of evolution. They would ask us to put together pitch decks, put together results of a first marketing run, a first initiative to then be presented to investors so they could scale that success. Even being asked to participate in those meetings. Oh, wow. I was then introduced at that point to Regulation D 506C, which allows for solicitation of accredited investors, high net worth, high household income audiences. With my background in advertising, ad tech, I was able to run ads, drive traffic directly from those individuals through advanced targeting, and saw success, was introduced to more issuers, companies issuing shares. Reg CF went into effect, regulation crowdfunding, allowing us to target both retail and accredited investors. And the light bulb went off then, where I realized, hey, we could be of direct impact to these groups. We can find our niche, our specialization, very important for an agency to do. DNA can be an investor marketing agency, and we can build our own audience data. We could do our own data collection and putting together lists of investors, finding contact info, reaching them with advertising, with outreach. And yes, as you said, it's a marketing play. We're driving traffic. Tens of thousands, hundreds of thousands, millions of prospects to an offering page, pitch deck, vertical pitch deck, pitch video, button to invest now and hold the transaction in many cases. So you're getting all of that marketing value. You're telling your story. You're enhancing the brand. You're generating all this momentum to be able to point towards to get a higher conversion rate. And on a successful campaign, maybe we're getting a 10x higher type of return, marketing efficiency ratio. And that ends up getting funded by the capital raise itself. So it's basically added value. It's basically gravy. And I started watching some of our clients get Forbes 30 under 30 type recognitions and obtain more market share, grow their offices, grow their team. I would see it directly excel what they were doing, accelerate the entire operation, and they would run another round with us and at a higher valuation. So I found this to be a very viable, very powerful marketing tool in its own right, beyond the capital that issuers are getting from these rounds.
So it seems like at DNA, you are helping people work their storytelling, how they present their product. Because I think, and we all know startups and founders are pretty good at building a product, but we sometimes forget in that storytelling part on how this product will change someone's life, how this product will make someone else money, how this product will be a game changer. And I think that's what DNA does best. I think you guys capture what this product or service is, and you excel at making sure it's investor ready through pitch decks and other marketing material that you've mentioned. So,
Absolutely.
and for founders new to Reg CF, Reg A plus, what's the biggest misconception that you've found about investor demand?
Well, it's like you said, the storytelling. We need to make sure the audiences we're going after not only understand the company, product, team, trajectory, which you have to talk about in a compliant way. There's different rules around it. They need to really understand these things to a point that is strong enough for them to invest, and almost more importantly, for them to tell others around them what the organization does, what the offering's all about. It's a crowd effect that we're playing for. Peer-to-peer marketing is a major component of this. And I find if an individual is not able to do that, they're probably not going to invest
100%.
in their own right. I mean, hey, I don't fully understand the tech is not something we want to hear from a prospective investor. So the storytelling, beginning, middle, end, talking about the problem, talking about the solution with a strong enough hook and value proposition, and being able to really explain, captivate, have the audience tap into the narrative around the whole mission. It's a big deal. It's something that many issuers miss. The other thing I would point out is a marketing strategy. When I say strategy, I don't just mean, hey, this is a marketing plan to check some boxes, as much as an algorithmic roadmap that the company, any marketing partners, any groups that are tied to the success of the campaign are all able to believe in. Something that explains, hey, this is what competitors are doing, groups that are targeting the same investors and looking to get a portion of their portfolio, some of their capital. They don't even need to be operating in the same industry. Just the fact that they're going after those same investors, they're competitors. I need to understand the marketing there, so then I can then pinpoint these are the target audiences we want to go after. Here are the channels we're going to use with this creative, with these strategic partners to accelerate and validate the deal. And then I said algorithmic roadmap. Here are the projections, impressions, clicks, conversions for each week, each month to hit the full goal. I want to hear a founder say, hey, we're going to get 100,000 visits to our offering page, hoping to see a 2% conversion rate. If we're not hitting 2%, this is what we're going to do to optimize. If the average investment is $1,500, that's how we're going to hit $3 million. This is what the creative looks like. Here are the channels. That to me says that group is set up for success. Anything short of that, conversations just speaking to the cost of capital without any real understanding of what are the traffic drivers, what are the lines of copy, the messaging that are going to convert audiences. It definitely shows me something that's overlooked and likely going to appear in their performance metrics.
Well, I mean, that really frames the job to be done. And if you could only fix one thing on day one when working with a new startup or with a founder, what is it and why? And that could be audience, the creative part, a funnel. So if you could only fix one thing on day one, where would you start?
It's a tough question because you named the three important pieces there. Uh, I have a gut answer of the audience. We've built a database of over 1.8 million historical equity crowdfunding investors, and I'm able to use that audience for real estate, gold, Web3, all different investment opportunities, not just equity crowdfunding, but it shows me these are highly active online retail investors, perhaps accredited investors. I can have the best messaging, awesome funnel, follow up system, but to the wrong people, it just may be barely moving the needle.
100%.
If I'm going after the right audiences, people who've participated in over 100 of these rounds, the response that I'm anticipating is completely different. Creative, what we're pitching, that story is going to play a large role. The funnel, all in the follow up. And it's going to be multiple touch points before an audience converts. Investors like to search around, do their due diligence. We want to be intentional about what audiences see when they're doing so. So each thing you mentioned is a strong piece of the puzzle, but the audience, some of the right audience members never see campaigns that are worthy of their attention. So I would say the audience is on a different shelf, a top shelf, if you will, and something that founders, marketing teams should go to great lengths to obtain.
Yeah, I think, as you mentioned, I think to create a funnel that works and to create a creative marketing content that works, you need to know which audience you're going to target. I think you mentioned they don't all behave the same, they don't speak the same language, so really depends on what startup you're working on, what type of audience they have, for you to be able to build the rest for them. It wouldn't make sense to build a creative content if audience is completely different than what you have in mind. So I think that really paints the picture right there. And jumping into the next segment on what has consistently worked for you guys. So you've built over 500 plus campaigns, and there must have been some learnings there. So what three inputs most predict a strong raise from your past experience?
So audience size and engagement levels, the first thing I ask about when talking to a prospective issuer. If they have a large engaged following on a social media platform, multiple social channels, if they have a large email list of their own, people that are considered their first degree network, friends, family, customers, clients, strategic partners, press. I've had founders work with me that said they were contacting fraternity brothers that they hadn't talked to in over 30 years. You really want to go above and beyond in terms of engaging that first degree network. If I ask about that and a founder, CEO tells me, we've exhausted our audiences, we've 20K raised. We've raised in the past, but we've 20K raised on this. It's usually a bad sign.
Yeah.
Other end of the spectrum, if I have a CEO tell me, oh, we have this major celebrity attached and they have millions of followers, I first want to look at those social pages and see what the conversation consists of. There's been flops in the industry, even with groups we've worked with, and large license holders, large groups, teams, social pages, individuals, athletes, musicians, that their audiences just didn't show up after the promotions. That being said, some of the top community rounds were able to tap into these digital audiences and have thousands of people invest overnight, or at least in that first week. So you need a groundswell. The first chapters are from that first degree network and audience is what I would point to. I would then say social proof via publisher mentions. These can be podcasters, these can be websites, apps, print publishers, Could include organizations that give awards and different accolades. It could be, anything with a logo, really. The more we're able to point to, the better. If those groups are able to do another piece of content, another promotion to their audience, wow, that could be a traffic source on its own. So people don't believe what they see online.
Mm-hmm.
The more validators that you're able to showcase, the better. Offering page, hey, every other section, I'd love to see something that's social proof.
I see.
Here's an investor testimonial, why they invested. Maybe they're a notable figure, maybe they're just another investor.
Mm-hmm.
Still serve some of the same purposes. Print appearances, conferences that the team has spoken at recently. Anything that can show, hey, this is legitimate, people care about it, something's happening here and it's getting recognized. The more third-party validation, the better. And then I would say numbers. If I look at the key reasons to invest, a top area of focus on these offering pages, and there's not enough numerical value placed on some of these key reasons, that's a major missed opportunity. So you want to look at what you have, prioritize, see what fits into your story. In some cases, it's the market opportunity and talking about how the industry is growing. In other cases, it's trailing 12-month revenue, sales to date, number of users, number of customers, even if it's a few rounds in, number of investors. You want to be able to show with measurements, only what it measures with numbers, that this matters, it's going somewhere, and now is the time to hop on board.
So you mentioned three things: audience, social proof, and numbers.
Mm-hmm.
And I think
Exactly.
we sometimes, as founders, forget one of these three, but they're all crucial when it comes down to
Oh, yeah.
predicting a strong raise. And how do you sequence channels that could be paid, influencers, PR, email, marketing, community, for compounding lift for someone that's trying to make a raise?
Content calendar. So I mentioned starting with strategy. We have a
Mm-hmm.
model we've built called the 8-point plan. I've written articles about it. I lead workshops on it. There's materials on our website that can help you template out and checklist what you're working on for each section. But it's largely what I've already mentioned with competitor audit, audiences, channels, creative, partners, projections. That's section 2 through 7 right there. But as part of that, as part of the creative section, really, or in
Mm-hmm.
preparations of a content marketing campaign and advertising launch, you put together a campaign calendar, content calendar, and you talk about what's going to be posted, where, and when. Uh, it needs to tell a story, take an audience through an experience. And you don't want to be saying, how about now, every time, as much as, did you look at what we did this week? Look what we're doing next week. Look at last week. New partnership, new team member bio. Uh, say it again, anchor investor, testimonial, publisher appearance. Look, we're doing this local group. A lot of the stuff can be manufactured, but you want to be adding to that story
Mm-hmm.
every week. And like you said, spreading it out so there's always something new to share. You're not going back to the audience with the same ask, but not anything really new to talk about.
I see what you mean. So, I mean, you've set out some good examples that we sometimes think will be too much. And I think what you've mentioned is making sure that our content purposes add value weekly. And that could be through sharing what we're going to be doing next week, what we did last week, presenting new team members, investors, you name it. But I think there's a lot of content opportunities that some of our listeners will be able to use on their side. And
Absolutely.
is there
I mean, it's
one? Oh,
social
sorry.
dynamics at play.
Mm-hmm.
So you want that crowd effect, that feeling of, hey, everyone's talking about this company. There's a line around the block. You don't want an empty restaurant sensation
Mm-hmm.
of, their product looks good. The team's impressive, but they don't seem to be raising more. Maybe they are raising a bit more, but they're not talking about it. It just feels stagnant. Is there something I don't understand here? Why don't more people care?
Mm-hmm.
Why aren't there others here? So you get to determine what the prospective audience is perceiving, and it should be a constant flow of new exciting updates, headline worthy announcements on a weekly basis.
And I think that ties into the what you mentioned about the three inputs on the social proof. So making sure that there's social proof around the product or service and what we're doing, because yeah, like you mentioned, sometimes it's repetitive when you see a company page on LinkedIn offer or tell the same story or blog post trying to for someone to get a click instead of building towards creating that audience and making sure that there's social proof that we're right there. And now, is there any one before or after where a landing page or creative revamp moved the needle? So an example where you changed something on the landing page or a creative revamp that was able to move the needle on your side.
Yeah. Well, we have the landing page, we have the offering page. Landing pages, I should say. One of the landing page formats that I really encourage founders to incorporate is a webinar and a webinar sign up. So you're getting an email address, you're receiving a new way to contact that prospect. You can have an email drip sequence running from there. You're inviting them to a special event, a live event. You can have guests there that are other thought leaders in the space and talking about how great what you do really is. It could be an investor, a partner, just some other notable figure. But being able to have that mid funnel conversion, you could see a higher conversion rate. And then following up with that contact through email, through retargeting ads, through multiple touch points, multiple channels, could help you see a higher conversion rate on your offering page, your investment as a whole. So it's definitely something that I would say is somewhat easy for a group to add to their mix. You want to do it right. You want to make sure you're getting enough people to the webinar. You could do recorded webinars. I like the live ones because you can answer questions and play off the audience, even allow the recipient, the attendee, to feel like a lot of people are there and asking questions. We've seen hundreds of thousands of dollars raised during the webinar itself.
Oh,
We've seen
wow.
over $1 million raised within a 24-hour window of the webinar. So great tactic to add to your strategy. As far as conversion rate optimization goes and enhancements to the offering page, as well as landing pages, not just creating a new landing page with the webinar sign up. Some landing pages are too wordy. Some don't have visual hierarchy really at the forefront, and they don't pass the glance test. As a prospective investor, if I'm looking at their offering page and on my mobile device, there's just too much there. I'm not really drawn in to read more and go through 10 minutes of copy. I kind of look at it, come to my own judgment, and move on. Maybe I tell myself I'm going to come back, but I move on. Where just having stronger headlines, bolded words in body paragraph as guidelines for someone who's scrolling through, the right numbers present, the right social proof, the right visuals, the right infographics, the right video clips, all designed to allow someone to really be sold while scrolling through in the matter of a few seconds. And then giving all of the appropriate information for someone to make their decision, figure out their choice on whether they're going to invest or not, by going into the fine print thereafter, but really focusing on that glance test and determining what you can add to have people hooked.
I think that's gold, clear and actionable for all our listeners. And it ties into our next question. So, when a campaign plateaus, what's your go to play to restart momentum?
When a campaign plateaus, what to do to restart momentum? I have to understand why it plateaued.
Mm-hmm.
We work on campaigns that are plateaued, uh, where that's where our starting point is. We're introduced to them because they're plateaued. In many of those cases, there's not an established traffic source. Meta advertising is a great place to begin. I think it's very favorable to market test there versus other channels. You may be able to begin at $100 per day, $3,000 a month on ad spend. A lot of groups, it's more 5, 15,000, and then they scale up as they're seeing performance. But the significance of $100 a day, you can market test 5 different audiences, $20 a day. You may only be getting 10, 20 clicks from them a day, $1, $2 cost per click, but you're going to be able to compare and contrast and see, hey, these audiences, that messaging down our funnel or down funnel A, funnel B is producing conversions. The others are not. Let's try to improve those. Then we're going to optimize towards what is driving. And if it continues to produce, we're going to look for opportunities to scale from there. But it's great for market testing. The traffic's behind it. It's something that we want to bring to the equation for a campaign that's plateaued. If we're working on it, let's say we've been running Meta for a while, maybe they're seeing success at first and it's slowed down. Maybe they just haven't seen success at all. We want to make heavier pivots. We want to go back to the drawing board. Those movable pieces that you actually mentioned, audience, creative, funnel, we want to come up with new tests. I look at everything as a test until it's validated with data. We have assumptions going in, but we need the numbers, the analytics, the actual measurements to show us this is working, do more of it. I want to get inspiration from competitors that are driving, that are leading the charts that week. There's a website called King's Crowd. King's Crowd shows all of the live Reg CF campaigns, as well as Regulation A+. You can go to formds.com, see some of the Reg D issuers, and start looking them up one by one, but not the same type of aggregation for Reg D. But I want to see what my competitors are seeing and then create something stronger from there. Video, social proof, webinars, being able to point at traction, all of that can play a strong role in turning a campaign around. And a good marketer should be able to do that. It's about being able to manage something to the point of effectiveness. If you can touch it, you can move it. If you can move it, you can manage it. If you can manage it, you can manage it to a point of effectiveness. How long? Going to change for every situation, but you should be actively taking steps towards it with new tests and looking for pockets of performance that you could later ramp up.
And you mentioned one thing that's really important. It's testing. We sometimes find a winner and we stay complacent and just stay with the winner until it fails. And when it fails, it might be too late to bring that back. So you mentioned something that's really important, not only for marketing campaigns, but also for landing page tests, for investment pages, webinars, etc. You always want to be testing and seeing what resonates the most with your audience and with the social proof and data that you have.
Your hands can be tied to that top performing segment if you're not testing new variants. Yeah. It's great to have evergreen. Let's keep running it. But like you said, what if it slows down? What if it plateaus? What do you do then? If you have some other variants running, even at marginal success levels, you can at least optimize towards those. Maybe you had some improvements at that point on top of new tests, and you're still in the game. Where if you've phased everything else out, one audience, one creative, one offering page, that's it. Not even a landing page, maybe one landing page and that's it. You're stuck to it, and you're almost starting at ground zero thereafter. So, like you said, test, keep running more tests. It's working great. Optimize towards working, scale that, keep running new tests.
And how do you remarket to what we like to call fence sitters and drive return visits to the offering page?
Well, we're looking at the retargeting pool on our advertising campaigns. And it's important that from the beginning stages, you've structured your events to be able to retarget those audiences at each step along the way. So there's a naming convention. It's commonly view content, add to cart, initiate checkout, purchase. You may have a few custom events in there. One's labeled other ways, but you can customize the message for advertisements for people at each stage of the funnel. And I mentioned, mid-funnel conversions, inviting them to a webinar, piece of content, seeing some big announcement, rather than just taking them back to the same destination URL. You could invite them to a conversation compliantly. You need to look into that, but to get different feedback could be through one of those events, and you need to treat the audience the same. They all need to have the same information available, but you basically want to get creative with it and roll out more tests to different audiences stuck at different stages of the funnel. People gravitate towards what others are doing, where others are winning, if you will. And if you're able to show all of the people who are now backing you, all the people who are talking about you, we'll do a lot of ads around, how many investors, how much capital. You should be able to see a lift, but just need to keep testing until you do. And once you see it working, lean into it, ramp it up, do more of it, and use it to get to your full goal.
It's beautiful. And do you have any budget or customer acquisition cost rule of thumb that you share with founders being high level, not compliance?
Yeah. Well, for a Reg CF campaign, the average investment in 2024 was $1,500, a little lower in 2023. Maybe we're seeing 2,000 to 5,000 on some campaigns, but 1,500, even 1,000 are good conservative numbers to project towards. So if you're getting a cost per acquisition from an advertising campaign, somewhere between $100 and $300, really 100 to 200, 150, you're in a good place. If you're at a cost per acquisition of $150, it's a 10x return on advertising spend. That's a good return. When you pull different agencies, different FINRA regulated portals where the deals are listed in the space, many groups are happy with 3 to 5x. I don't want to rest until there's 10x. You also want to measure the pixel return on ad spend, as well as the marketing efficiency ratio. How much is being spent? How much is being raised? Pixel doesn't track everything. There's extreme limitations for mobile iOS users that have not opted in to allow Facebook or Instagram to track them off app. They're not going to show up in the pixel results, generally speaking, at least. So there may be more investments, more conversions occurring from a traffic source that aren't being attributed. And if you label the whole thing as the ad report does, you could be selling the campaign short. Not even talking about DNA involvement. This isn't a sales pitch as much as your ad campaign may show 3x. Really, it could be 9x that's coming from that traffic source. You want to do a good job at looking at the overall analytics and figuring out where traffic's coming from, where conversions are coming from, taking guesses to fill in the blanks, and then the ultimate test, scale and see if results scale. That 3x campaign, if you are spending twice as much the following week and seeing twice the amount of investments occurring on a weekly basis within a 3-week window, hey, you have something there. If you're able to do that again and again and again, it's all about being able to have these scalable traffic sources. You get featured once by a publisher, they're not going to cover you again. Even if you got a great amount of conversions in the 24-hour window to follow, it's difficult to replicate, difficult to manage, difficult to move. So you got to figure out what's going to be adjustable for you.
Now that really does paint the picture. And now going through our last segment, could you share a campaign story where a smart marketing directly drove capital in? So what changed, what you measured daily, and what actually was that piece that closed investors and helped them through that fund?
So many examples I could share. One company that I like to talk about is Mode Mobile. Mode Mobile allows for both software and hardware users to earn money while they're using their phone. Something we all spend hours a day on, at least looking at the average American, hours a day. So they have a hardware, a mobile device available at Walmart and Best Buy. They have a software available for download on other hardware platforms. And their Regulation A Plus campaign completed first in May at $45 million.
Oh wow.
Later reopened and got up to $53 million. Also did a Reg CF for them with over 4.8 million in 3 weeks in September. But just focusing on that first tranche, we have a lot of data around it. We saw a 29.25x return on ad spend on the pixel data.
Wow. Okay.
And they were running campaigns with a variety of different financial email newsletters, financial publishers as a whole, seeing different types of return on ad spends, but with first click attribution from some of those. And as they scaled more towards Meta, it wasn't always showing up in UTMs and Google tracking mechanisms, but we would scale into it. We'd see more performance of showing up on the Facebook pixel data, which is very difficult to get from many campaigns. They kept leaning into it. As the founder, Dan Nevaez, very strong leader, was appearing in more places, more conferences, more podcasts. He did a podcast with Steve Wozniak from Apple.
Oh wow.
We would continue to repurpose that creative as part of the storyline, as part of the content calendar for the advertising, and on a weekly basis created new variants of ads. And the larger the publisher, the larger the figure saying, hey, Mode Mobile's great, the more we pointed at how many investors. They have over 50,000 investors at this point. The more money raised, that the more conversions we would see. So we would watch that on a daily basis, figure out what we're putting out next, looking at direct response metrics, aggressive ones at that, and doing more of what was working, phasing out what wasn't, and hit very large goals accordingly.
And that's funny that you mentioned them because I've heard through them about Mode Mobile through Facebook and email, and on one of my newsletters. And I made this comment to my wife. I really liked the investment page because it was easy to read. I could see the numbers, and what caught my attention was I was gonna be able to get paid for using something I use every day. So that's what caught my attention. And I mean, it's funny to think that you guys worked on that campaign, and I mean, it's still one of the things I didn't invest on, but I regret it. So if there's any other opening, let me know, because I did really enjoy what I learned about Mode Mobile in 5 minutes, and I knew what they did, where they were going, and what the investment looked like. So, I mean, I thought that was pretty exciting. And
I learned about them from a YouTube video, YouTube channel. The video, I believe, was tied to a title of modern day slavery, and showing our mobile devices and showing how we're really connected to these things, and some of the privacy filters that they apply, some of the partnerships they have with publishers and what that allows for. Dan, their CEO, is an amazing marketer. He's been on my podcast and said, he knew that and was able to build the organization as part of it, meaning he built it around his skill sets and where he saw success from the past, and tie it into this amazing product. But they've received far more value than just the funds raised from their campaign, the marketing, the growth, their market share and positioning. Great example of all the things we've discussed here.
And if a founder wanted to copy this tomorrow, what would you say is step one?
Well, studying that offering page, like you said, given they have a lot to point at.
Yeah.
Deloitte, number one fastest growing company. Again, all these accolades, their growth metrics and what they've seen on the advertising side from their own ad sales. I mean, they have a lot to be able to point to. But there's key components of their offering page that should be studied. It can absolutely be part of the strategy, be part of a founder, another group's offering page. Would also show you some of the marketing that they've done. You could get in touch with some of the publishers. You could start looking at their ads. You could sign up for their email, like you said, but there's a roadmap. Success leaves clues. So I would say everything from the pitch video to the social proof sections to the way the graphs are presented, and then a heavy emphasis on the marketing partners they used, not just as an agency, but the visual ones you could see on there. Yeah. And start crafting the story for your own social proof and third-party validation. It's just to establish trust from a cold audience that's first seeing you online.
That's crystal clear. Now, we'll land the plane with a quick lightning round, and then we'll go through the closing. So we'll start with the first question on this quick fire round. And the first question is, what is the most overrated tactic in investment crowdfunding?
The most overrated tactic, thinking that the offering page, thinking that the FINRA regulated portal you're working with is going to fill the round for you. Hey, I'm listing this on the internet. There's billions of people a day online. I'm going to get investors right and left. It is overrated. I'll tell you, speaking with some of the portals, speaking with some of the service providers, they may give you that feeling directly, indirectly, subconsciously that, hey, put up an offering page, this space is moving, you're going to be able to get investors to find you and put in their hard-earned funds. Nope. I would not expect that for a moment. I would look at how you're going to get the right amount of traffic, where if you're seeing 1 out of 50, 1 out of 100 people invest, and at average levels, minimum levels even, it's meaningful enough towards you. And having the right people involved so that hey, if this isn't working, we're going to be able to do some conversion rate optimization. We're going to be able to figure this out, get it to a better point. It may not perform right out of the gate, but we're going to keep doing it. We're going to crack the code. And whether it takes a month, whether it takes a few months, whether it takes the whole first round, we're going to keep doing what's working from there. And we're going to do it at higher levels at that point. We're going to run another round. We're going to keep taking it to the next stages. But you need to run marketing. You need to have the right experts in your corner, at least signing off on what you're doing and telling you, yeah, it's got a good chance towards success. And I would not think merely posting is going to produce the results you need.
100%. And you mentioned, everyone will do that. So what will make you different from every other, post in that crowdfunding site? Now the second question, most underrated lever for conversions.
Most underrated. I'm kind of thinking the retargeting ads. Going back to that first point that some people think just posting or not marketing is going to work. First degree network retargeting ads, it's going to help convert them. You're going to get a higher percentage of them in as a rule of thumb because it's running. Advertising campaign, the prospecting's good, the retargeting is better. The prospecting is arguably just to build a retargeting pool. The retargeting pool is where you're going to see your performance. For those reasons, I think you can't say enough great things about retargeting. 100%. It has to be done well. You can't be overbidding on it. You can't be doing it too aggressively. You're limited to your retargeting pool. You're limited to the prospects you've driven to that offering page. But whether you're running financial email newsletters, again, your first screen network, the portal's audience, you're getting press and organic audiences, or even your ad campaign itself, you need to be able to retarget and have the follow-ups. It's all in the follow-ups. It's probably going to be touch point 17 that investor converts. So whether it is emphasized to you, definitely. If it's not, retargeting is underrated.
Perfect. And then one metric you watch like a hawk.
Conversion rate. Return on ad spend is what people want me to say. CFOs, CEOs, marketing directors, founding team as a whole. And it is important. It is something we talk about. But hey, I could run a $300 retargeting campaign only to people at the last stage of the checkout, maybe get a 30x and say, hey, look at what we did, but that's $9,000. What does that really mean?
Yeah.
If you're trying to raise $5 million. So that can be misleading. Just as a whole, these campaigns are built on enough traffic getting to an offering page with a high enough conversion rate. And the conversion rate is the most important piece. If I can have a stable conversion rate, drive new traffic there, different traffic sources, that conversion rate stays true. Hey, a lot more investments coming through. I could keep taking it to the higher and higher levels from there. You can do the math for the cost per clicks, and hey, we're getting 100 people there, $1.50 each, $150 cost per acquisition, $1,500 average investment. That's 10x return on ad spend. If that conversion rate is half of it, if that conversion rate is under 1%, if it's 3%, 5%, it's completely different results. The conversion rate is what I would point to and watch closely.
And then last question, one book that you would recommend to first-time founders, and that could be a book, podcast, resource, you name it.
Book, I haven't quoted in a lot of books. I've written sections of different books. I haven't written my own yet. But book I've pointed to a lot in my consulting and my content is the E-Myth, the entrepreneur myth. It talks about the difference of being self-employed and being an entrepreneur, the contrast of working on a business versus working in a business. And that to me has made all of the difference. That to me, if I was only to point at one book with consulting conversations, even just agency client discussions as the consultant and client, I would point towards that. It's just a clear explanation of how to run a business and in a scalable way.
So I'll add that to my list because I've been taking some really good books from some of our guests, and you're the first one to mention this one, so I'll definitely add it to my book list. Now, two other takeaways from this conversation were investor money follows audience, creative, and the funnel, and that order matters, and scaling is systematic, so testing, sequence channels, and remarketing until the conversion math works. Jason, where should founders go first? DNA site, a case study, or straight to a discovery call? And what's the best way to connect with you personally?
Well, I'm on LinkedIn, Jason Fishman, Marina Del Rey, DNA. Reach out to me. Always looking to connect with more people, make more friends. We're always looking at strategic partnerships. Connect, send me a message. You could go to digitalnicheagency.com as well as our YouTube channel, Digital Niche Agency, youtube.com/digitalnicheagency. Have my podcast on there. We put out webinars monthly, each with a new deck, each with new educational materials, and love talking marketing. Can have a cup of coffee, get on the line with you, give you different ideas, me, someone on my team, what have you. But whether we have the opportunity to work together or not, as I said, talk to experts. This is where it all happens. We welcome a warm marketing chat at any point.
I appreciate that. So we'll link Jason's LinkedIn on the show notes below, along with the DNA website and the YouTube podcast, so everyone has access to that. And if this helped, follow, subscribe, and share with one founder who's raising this quarter. Drop your number one capital raise blocker in the comments. Jason and I will riff on solutions in a future episode. And Jason, thanks again for coming on. I'm Johan Mejia. This is the Enhance AI Partners podcast. See you next time.